Let's talk about Emerge Gaming ASX EM1. This video was requested by Yahya, so thank you so much for your comment. Now this company has had a lot of hype up towards the back end of last year, as you would have seen, but now the share price is more or less back at the same levels as it was 6 months ago. So what's exactly happening here? In this video, we'll talk about what the company does, what they're hoping to achieve, its current financials, and my personal opinion on the stock. Hey guys, my name is Faizi. On this channel, we look at investing and personal finance, and today we're looking at EM1. Just keep in mind that this video is not financial advice. I'm not a financial advisor. We are speaking in a very general sense only, and I just have a passion for finance, same as you. Let's get into it. Now let's look at a quick overview of the company. So Emerge Gaming has identified that esports and the gaming industry is an industry that's going to grow in the future. In fact, a report by Newzoo Global says that the world's 2.7 billion gamers are going to spend around $160 billion on games in 2020, and the market will surpass $200 billion by 2023. So basically, Emerge Gaming offers an online gaming tournament platform where gamers of all skill levels can come together and compete against each other. So basically, you've got hardcore gamers, casual gamers, and all sorts of other people in between. Now, they've also partnered up with Microsoft to host a cloud gaming streaming service, which gets rid of the significant costs that they would otherwise pay if they did this themselves. Now, what's different about this company is that these guys are partnering up with mobile network providers, affiliates, pay TV providers, and other avenues to form a strategy. So here is a big opportunity for this company because they are targeting mobile gaming. Because as you can see, looking at the market, the US mobile gaming revenue is 90 billion at the moment. There are 5 billion global mobile phone subscribers, and 5G subscribers are going to grow to 2.6 billion, which is just insane. Now, this is very important because the easiest way to start gaming is through your phone, because these days it's almost a necessity to have a phone rather than a games console or a gaming PC. Because think about it, if you get a PS5, that'll set you back 600 to 750, plus you'll need a TV, plus you'll need to buy other games which are expensive as well. And similarly, running a huge gaming setup on a gaming computer is pretty costly as well. So for people in developing countries, the easiest way to start gaming is through a mobile. So all of this information brings us to a problem, which is that gamers need significant hardware to start gaming. There are huge download sizes required for games, and it's low latency. So EM1 has solutions in the form of partnerships and technology, and their game cloud streaming product will allow people to play AAA multiplayer games from their phone without downloading the game itself, using the 5G network from MTN, which we will talk about in just a second. And they've got two products at the moment, with the two biggest being MTN Arena and Mixstar, so let's talk about them. Now, MTN Arena comes from the company which is MTN, who is the biggest multinational telco in Africa, and it also has a huge customer base in the region. Plus, it's also listed on the Johannesburg Stock Exchange. So partnering up with the telco obviously makes sense because they are targeting mobile games specifically, and MTN is going to provide the 5G network. So in this partnership, MTN is going to commit to spending $200,000 in marketing spend and sending out 2 million SMSs per month to its customers to essentially advertise the platform. Now, this announcement is quite old, so in the present time, MTN Arena has registered about 95,000 new subscribers, as you guys can see right now. So that's MTN. Let's now look at Mixstar. Now, Mixstar has access to a large network of affiliates, and based on the agreement with TIM, which is Impact Crowd Technology, they have guaranteed 100,000 subscribers, which would create annual recurring revenue of $14.4 million per year. Now, fast forward to present day, we can see that this actually ended up happening because based on their current announcement from the 3rd of March, which was just a few days ago, Mixstar platform achieved 150,000 subscribers and is set for growth. Now, the main sources of revenue and monetization for Emerge Gaming are the subscription-based recurring revenue, which are charged to gamers from MTN Arena and Mixstar. And we've also got advertising revenue, corporate sponsorship revenue, and e-commerce revenue through digital assets as well. So you guys can see that MTN is a yellow dot, and they mostly operate in the African region, but through Mixstar, they are hoping to reach over 150 countries around the world. Okay, so now let's look into the financials of this company, because arguably this is the most important part and you need to watch this. Okay, so on to the profit and loss statement, and we can see that revenue has gone up from 0 to 1.36 million, and similarly cost of goods sold has also gone up from 0 to 780,000. But what's really interesting here is the other income, which has gone from 18,500 to nearly $1.3 million. Now, keep this figure in mind because we are going to discuss this figure in more detail, because this is the part that needs to be looked at. Now, looking at the expenses, they look fairly similar to the year before. However, there are a few drastic changes in R&D, as you guys can see over here. It went from 141k to 321k, and we can say that this may be because of the technology that they're trying to develop. Now, marketing expenses have also gone up as well from 6k to 94k, and we can attribute this to the launch of Mixstar and the MTN partnership, so this is to be expected. And the professional and PR expenses have also gone up as well. Now looking at the balance sheet, we can see that this time round there has been a significant increase in the cash balance from $2 million back in the last reporting period to $12.3 million. And consequently, current assets have also gone up from $2 million to $24 million. But the current liabilities have also gone up from $256K to $18.6 million. So based on these figures, if we look at the current ratio of this company, it is currently 1.29. So to me, personally, it is not high enough, especially since they only just launched MiGStar and MTN Arena was just launched in July last year. So to me, I'm not too comfortable with this because it's too soon to see if these services are even gaining some traction because it hasn't even been a year yet. Now there's $12.34 million worth of cash on the balance sheet. We will dissect this even further, and this only came from the subscriptions that were recently launched. So looking at the cash flow statement, we can see the receipts from customers were $7.5 million, as this was the main driver of their current cash balance, and this was mostly achieved because of the recent launch of MiGStar and MTN. Otherwise, most of the cash would not be here on the balance sheet, which means that if the momentum from subscription stops or even slows down, there could be some trouble. Now let's look at the breakdown of revenue. So we can see that sales mostly came from MiGStar at 1.3 and MTN at about 69,000. But I want you guys to pay attention to this other income over here of 1.3. Remember the $1.3 million that we spoke about earlier? Well, this is a breakdown of that income. Now the $200,000 from the R&D tax credit is just a tax incentive, so we can't really count that as income. But the most surprising thing out of these whole figures is the gain on sale of digital currency. Now the only thing that I can think about when it comes to sale of digital currency could be some sort of a cryptocurrency or maybe Bitcoin or something. So to me, it doesn't really look like reliable income because it's just a gain, and we can't really expect a similar gain in the future, especially when this currency is now sold off, and the interest received is the last point at about $2,000, and this will start to decrease as the company starts to use its cash. So the most important thing that I'm trying to get at here is that yes, they made a profit, but if we exclude this other income and we get rid of this sale of digital currency, whatever this is, they would have still made a loss of about $800,000. So that could be a reason why the recent drop in share price has happened. Plus some other reasons could be that before the launch, EM1 was creating so much hype around pre-signups. As you can see, by the 20th of October, MiGStar achieved 6 million in pre-registrations alone. But when it comes to actual paying customers, we are sitting in March right now, and right now MiGStar only has 150,000 paying subscribers. So this equals 2.5% of 6 million, which is quite underwhelming to the market, hence the share price dropped. This is what I think, but what about you? And on top of that, they also made a typo on their announcement. Anyways, what are my thoughts on the company? Let's talk about it. Firstly, I just want to say that gaming has been a huge part of my life and my childhood since the beginning. I've been addicted to so many games like Counter-Strike, Call of Duty, RuneScape, League of Legends. So when it comes to companies innovating in the gaming and esports space, it makes me quite excited. But in the case of EM1, for me, it is still quite highly risky and highly volatile. And we need to see more traction coming from subscriptions, and we need to see actual profit that is not reliant on other income and sale of digital asset. At the end of the day, it is still a highly risky penny stock, and personally, I'm not going to be jumping into this at the moment. But I will be keeping my eyes on this one, just like how I'm watching Dough and IOU Pay right now. So if you want to know why I'm looking at these two companies, check them out, and please like and subscribe, and I'll see you in the next one. Bye now. So if you guys want to know why I'm looking at these companies,